If you're looking to get into a career or make money in the ICT style, don't miss this video. Being a unicorn is one of the most powerful departmental concept combinations, which by using structure breaks, FVG, and liquidity shows you very precise entry points. Before we start the tutorial, follow me on social media, especially YouTube, like and subscribe, and turn on the notification bell so you don't miss the latest videos. Because in this tutorial, you'll learn how to use the unicorn setup for entries, just like professional traders do. So let's get into the tutorial. Alright, hello. To get familiar with the unicorn algo, or actually the unicorn itself, you need to have some basic information about various topics so that you can actually set up this algorithm easily. The first thing you need to be familiar with, it's actually the breaker block. Now, whether it's a bearish breaker or a bullish breaker or a bearish breaker, I'm going to show you a bullish breaker block right now so you can see how this breaker block actually works when the price starts from a low. You should consider this as my first low here. And the next one, that is, it actually forms a high, which I'll label here as my first high. The price needs to be able to form a lower low, meaning a low that breaks through my previous low. So if we assume that this is my previous low here, then it breaks this low and creates a lower low. I'll write it here as an abbreviation, a lower. Low means, in fact, I'm going to write down 2 capital L's right here so you can easily identify it on the chart. Okay, that covers this specific part of the movement. Now, for the next step, the price needs to be able to consistently move upward until it goes well above the previous high point. And it should also close the candle, meaning it should form the next higher high as well. So I had a high here, and I should also have a higher high here. That's what I'll call it. HH, or the same as higher high. So a low, a high, a lower low, and a higher high. As a result, I had a block here that can act as a support for the price. This high has been completely broken, and with the price retracing towards it, with this, it can act as a support here and push the price toward the next higher high. Push it up. This was an example of a bullish breaker or an upward breaker. Now let's look at a bearish breaker as well. If we want to analyze it, it works like this. To have a bearish breaker, it's enough for the price to form a high, then a low, then a higher high, and then a lower low. It forms, and with a return to the zone, we have a bearish breaker. In fact, it continues its own movement. Again, as always, you can see it here. Here I have a high, which I'll label as high 1. In this specific area right here, I also have a significant low point, which I'll call low 1. So you can easily see it on the chart. Now, for the trend to continue, the price needs to be able to form a clear higher high, meaning it should be able to successfully break above these previous highs. Let me take a moment to highlight this point for you as well. And once we see the completion of this expected pullback, it should be able to close well below that previous low point, which effectively means it forms a clear lower low. I'll write these down for you. So this becomes the higher high, which I have here and here as well. I'll mark the lower low for you with this symbol so you can see it. Now the price, considering that there was a block here in this area, it acts as a support. Here as well, it can be a breaker block. This is also a breaker, and the price acts as a support here. And with a retrace toward this area, the price can, over a certain distance, push back down again. In fact, it can push and guide it downward. All right, that's the breaker part. Now let's move on. Let's see how you can get familiar with this pattern. Do you also need to know about FVG? I have prepared a comprehensive video about FVG for you so you can get fully acquainted with it. But just so we can have a brief discussion about it here, and so you know what it is, I'll explain it to you very quickly. All right, to get familiar with FVG as well, you should know that FVG is also a candlestick pattern. Now, I'll try to quickly draw it out for you right here. Just imagine for a moment that this illustration is our specific candlestick setup. It's a pattern, a candlestick pattern where the price is moving upward and the first and second candles do not overlap each other. Looking at the second candle, we see a specific part of it remains completely unfilled by the price action, and those original orders remain open. This particular area is commonly called FVG, this area where there is no overlap between the first and second candles. This video explains this completely, and I have prepared a separate video specifically about FVG. You can watch that one as well. But here, so that you can understand this pattern, regarding the unicorn setup, I wanted to take a moment to give you a brief explanation. I mentioned here for you earlier that this specific pattern is actually called a bullish fair value gap, or as it's also commonly known in the trading community, ABCG. It refers directly to the buy side imbalance and the sell side inefficiency. What this really means in practice is that the price action is balanced on the buy side, but there is actually a notable lack of selling pressure or liquidity on the opposite side, creating this unique gap. Inefficiency, meaning we're actually seeing the inefficiency of sellers in this area. Now, if we suppose that we want to look at its bearish model as well, or actually see the bearish fair value gap, it's basically the same pattern, just in a bearish form. All right, so now we've become familiar with breaker blocks and FVG. Let's move on. Moving forward, let us take a closer look at how the combination of these two specific elements can form a unicorn setup. As we have previously observed in the demonstration, I have a path here and it has formed some intricate small loops, which also created some higher highs in the process. Here I have it, and now I want to see how exactly the unicorn is formed. Here I have a low, a lower low, and a higher high in this area, which is my breaker zone. I mark this, and if at the time of the breakout in this area, which isn't breaking yet, an FVG gap also forms. So let's assume that happens. Now I'll put this area here and let me change its color so it's more noticeable. Okay, now this area is my breaker zone. But my lower area is my FVG, and by combining these two together, if these two indicators overlap, it creates a very strong zone and provides a much clearer signal. It creates an attractive opportunity for the other side. You can use it as a high probability setup and enter. When the price reaches the zone, you make your decision. In fact, it's the combination of the breaker block and FVG. It's a unicorn pattern, which is what I call the combination of these two together. The unicorn model, which is very powerful and strong, can create great trades for you. Now, this is how it looks in the bullish example. Let me draw the bearish example for you as well, so you know how it can be. In the bearish model too, here there are structures like low, higher high, and lower low. It came into my breaker zone, and with this move, well, it died. Here, I really need to have a circuit breaker right here, which should be associated with an FVG that was in this area. So let me change the color of the FVG. Now this color means that this part, which is in my low, is a breaker. That's what I'm marking. As you can see, the breaker here, when it was broken, became associated with an FVG pattern. All these FVGs together have basically created a unicorn for me. The price retraced, and in the area where the FVG and breaker intersected, which is my unicorn model, all of this I'm explaining so you know. In fact, this entire path was a unicorn, meaning these two zones together formed the unicorn pattern and continued onward. In this area, I was able to execute a valid trade, and it worked very well, holding the price completely until it created a new lower low. This is essentially my unicorn pattern, which can provide some really great trades. In order to be able to control your trades and have a good setup, you need to look at the price condition. You should analyze it from the lower part of the range. In fact, you can place your stop behind the FVG or behind that swing. It depends on where you are in the market and on which time frame you are doing this. You can even set your take profit exactly. You can at least target up to this swing. You can at the very least expect the market price to drop down specifically to this swing level. And in a potential bullish scenario, you can also anticipate further movement. At the very minimum, you should expect the price to move steadily up toward this particular swing high. Well, depending on where you set your stop and how this price condition is, you can get different risk-reward ratios. Even in those risk-reward scenarios, you can use this method to make decisions. Let's continue. Let's look at a few examples of this on the price chart as well. Let's all watch so you can see how the situation actually unfolds on a real chart. All right, in this example, we're looking at EUR/USD on the 5-minute time frame, which has been following a downtrend. The price has reached these support zones and has shown a reversal here. In this area that you're looking at, right at the spot where the price is currently located. I have a breaker block here, and actually I can either take this candle or I can take these two green candles together. But in any case, the strength of this upper candle is greater because it resulted in a long wick and really pushed the price well down. And after it returned to this block with a strong candle, it turned this block into a breaker block and a breakout occurred there. Now let's see how the price condition develops. My decision, or rather my prediction, is that this breaker block, which has been confirmed by this FVG, has created a unicorn for me. It has created a kind of unicorn setup for me so that when the price returns to this area, I can execute my trade, take a long position, and even manage it exactly up to this level, because as you can see, the previous level is very close to this one. I can even manage and maintain my trade exactly up to this liquidity level. All right, now let's see how the price actually moves forward in the chart. The next candle, this candle, has entered the unicorn zone, touched 50% of it, but actually closed above the 50% level, and I can enter the trade on this very candle. Okay, let's see about setting the stop loss, because market conditions and price situations can have different scenarios. If I want to take this trade with less risk, I can set the stop loss at the end of the FBG. I also set the stop loss and take profit so that the price moves at least up to this liquidity level. As you can clearly observe from the chart right here, this setup actually gives me a solid risk to reward ratio of exactly 4-1, which can be very beneficial. In fact, this specific trade will bear a significantly lower level of overall risk exposure, and we will carefully watch how the price conditions develop over time and how we can effectively manage this trade to successfully achieve a very substantial and consistent profit. As we can see, the price hit this zone exactly, and even the next candle couldn't close below 15%, and it respected this zone and the unicorn pattern and is continuing its upward movement. Let's see, within what time frame is it possible for me to reach my take profit? All right, let's wait. We see that the pullback came close, and at this point, I was able to reach my take profit. All right, let's go and review another example together. Let's see how we can use this pattern. Okay, we're on the EUR/USD pair in the 4-hour time frame. So let's analyze this as well. Right here on the chart, we can clearly see a low followed by a high and then another low point. So now we are patiently waiting for a new higher high to form. And by carefully reacting to this specific price zone, in fact, within these key areas, we can look to take a profit and simultaneously open a new long trade position. Just give me a moment while I clear all these drawings from the screen. All right, right here I have a specific price block, and if the market price can successfully break through this level, it will then officially turn into what we call a breaker block. Let's see under what conditions the price moves forward, and can it break this resistance and give me a breaker block? Well, as you can see here, this zone was broken and my breaker block was formed. In this area, I also have an FVG. I'll mark this and let me change its color so it's clear. This is actually my FVG. This is my FVG, and this is actually my breaker block. Let's highlight this and see how the price reacts after it returns to this zone. And where can I enter my trade? Now my unicorn pattern has formed and I'm waiting for the price to reach the zone. Actually, I'm waiting for my breaker to be retested so I can take an entry from it. Now my entry is also limited to the FVG zone, and I know I can enter here with a bit more risk. It touched the FVG zone. I can open a long trade and place it here. That's it. I can set my stop behind the FVG zone and even take my second TP from this trade, meaning I can even take my trade all the way up to this swing. Well, this is actually one scenario I can consider. The next scenario is that the price reaches the zone. In fact, if both the FVG and breaker overlap and an entry is triggered, I can enter the trade here. I can set my stop behind this zone at the close of this candle, as you can see, and target up to this swing as well. Basically, I hold it and watch how the price behaves. You can see that it even came down to the bottom of the FVG. It didn't hit my stop loss because I set it at the FVG. In fact, if we look closely, I placed my stop loss in exactly the right spot, and now you can clearly see the price movement unfolding. You can see that it could definitely be a winner. Here, as you can see, I was actually able to make 2 successful trades right here, but there's one very important thing to consider before we move on. The thing is, the stop loss I set can be very close. If I set my stop loss too close to the FH zone, actually, if we put it right on this candle, the one that formed here, let me clear it in the trader. On this candle, my stop loss would have been hit, but I had set it a bit lower. This is something that depends on the situation and the timing, so I can't say for sure. For example, I can't tell you exactly how much lower than the FG you should set the price, but considering that the price structure is very favorable, even if you had put your stop loss behind the FG and your stop loss was hit, with this candle, all the liquidity that was in this area, including the Unicron music zone, was taken out. You could have entered again. Let's assume that this entire scenario failed. You would have set your stop loss, meaning with this same candle, everyone would have entered and said their take profit. Here, you could have gotten a take profit of about 6, and it could have been a profitable trade. Ultimately, it could have created this opportunity for you. So try to analyze this pattern on your chart. Be sure to do your testing, and after you've mastered it, you can apply these conditions in your live trading as well. I hope you have profitable trades and make the most of this strategy and this setup and pattern. Have a great day. Goodbye.